Doesn't the year fly by? Yes, good morning. We're into October already. It's Monday, the 3rd of October. And we're back here at Atlantic Capital Markets, as always, with our roundup of the coming week's economic highlights to keep an eye out for. So, as always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and we'll then dive into some of the more significant highlights afterwards with our own thoughts and analysis. So, without further ado, let's get straight to it. So, the economic numbers being issued this week start today with the release of the latest global manufacturing PMIs and the ISM manufacturing PMIs over in the US. Tuesday is interest rate decision day in Australia, and we'll give our thoughts on this straight afterwards. Also on Tuesday, the release of the latest US factory orders. It's also interest rate decision day in New Zealand on Wednesday, and also OPEC Plus have their latest meeting, which we'll discuss in more detail in a moment. Wednesday also sees the release of the latest global services PMIs and the US ISM non-manufacturing PMIs. On Thursday, the Eurozone updates us on how their retail sales are faring, something that we'll take a look at in more detail in a moment. Thursday also brings the latest German factory orders and the US jobless claims. Well, Friday is US non-farm payroll day, and we'll give our thoughts on these towards the end of today's video. And Friday also sees updates on the retail sales in Germany and unemployment situation in Canada. And the companies that we'll hear trading updates from this week start today with Jules Group. And on Tuesday, as their share price trades at its lowest level in a couple of years, Greggs are due to release their Q3s, which we'll discuss in more detail in a moment. The UK's biggest supermarket retailer, Tesco, are due to release their first half-year results on Wednesday. And again, we'll give our thoughts on these afterwards. And Thursday sees the release of Q2s from alcoholic beverage giant Constellation Brands. And we'll take a look at these in more detail as well afterwards. Also on Thursday, we'll hear from Levi Strauss. And finally on Friday, another key consumer spending bellwether, JD Wetherspoons, are due to report their final results for the year, which again we'll discuss at the end of today's report. And to wrap up the week, we'll hear from Tilray. Well, the pound was on quite a rollercoaster last week after the Chancellor's mini-budget grew fears over the economic outlook for the UK. The Bank of England staged an intervention in the bond market, just a week after Japan also intervened in the forex market, as the US dollar strength becomes more and more of a problem. With the Reserve Banks of Australia and New Zealand due to announce rate decisions this week, central banks will of course remain in focus. Any developments from Westminster will also be under the spotlight, as well as the OPEC Plus meeting later on this week. So let's take a look at this week's bigger stories in more detail. Tuesday is interest rate decision day in Australia. Well, the Reserve Bank of Australia has hiked rates by 50 basis points in the past 5 meetings, taking the OCR to 2.35%. The RBA has said that more interest rate hikes would be needed to bring inflation back to the target of 2 to 3%. However, the dilemma for the central bank will be whether to raise rates by either 50 basis points or possibly to slow the pace to 25 points. The minutes of the September meeting saw policymakers acknowledge that hikes could slow given the lag between monetary policy decisions being taken and the time it takes for the impact to be reflected in inflation data. Furthermore, the minutes said the case for a slower pace of increase in interest rates became stronger as the cash rate rises. The Aussie dollar against the US dollar trades at around a 28-month low. Well, the nation's favourite high street sausage roll seller Greggs are due to report Q3s on Wednesday, which comes as the share price trades at the lowest level since late 2020. The cost of living crisis is causing consumers to rein in spending, which in addition to surging costs is hurting the outlook for the firm. That said, given how significant energy costs are at the bakery, news that the government is capping energy costs for the businesses over the coming 6 months will of course be well received. In August, the cost of sales rose by 32% to £260.7 million. Some of this was absorbed by higher prices, but investors will keep a close eye on this number this quarter. Greggs has said that they are confident in their full-year outlook. The UK's largest supermarket, Tesco, is focused on keeping prices low as consumers struggle amidst the deepening cost of living crisis. However, this will of course squeeze margins, so the half-year results on Wednesday will make interesting reading. Tesco is expected to report a 5.5% rise in revenue to £31.98 billion in H1, alongside an 11.9% decline in adjusted pre-tax profits to £1 billion. With low-cost rivals Aldi and Lidl, competition is fierce. Over the year, Tesco aims for an adjusted retail operating profit of £2.4 to £2.6 billion. However, whether this is achievable will depend mainly on how consumer habits change in response to rampant inflation and rising recession fears, and the costs the supermarket must face. Wednesday also sees the latest monthly meeting of OPEC+. Well, the organisation agreed to a 100,000 barrel per day production cut in the September meeting, a token move, reversing the 100k barrel increase in the previous meeting. Oil prices have fallen around 35% since the June high, as recession fears hurt the oil demand outlook. OPEC Plus members appear keen to keep the price supported and have started talking about a further cut at the October the 5th meeting, potentially around 1 million barrels per day. Such a move could lift the price of oil. On Thursday, the Eurozone released their latest retail sales figures. Well, the numbers rose in July as increased food and fuel sales masked a fall in sales for all other items. Consumer confidence plunged to a record low in Germany, the Eurozone's largest economy. With energy costs soaring and inflation at record levels, there seems little hope of a surprise jump in sales. Expectations are for a 0.3% month-on-month rise, most likely due to food and fuel purchases increasing. Weak sales will raise fears over the health of the consumer in the region. Weak sales may also raise questions over the ECB's ability to raise interest rates aggressively. So, as a result, do keep an eye this week on the euro and the DAX. And in times of economic hardship, vice stocks can outperform. Investors will look for signs of this when alcoholic beverage giant Constellation Brands reports Q2 earnings on Wednesday. Wall Street expects revenues to rise 5.6% to $2.5 billion, with diluted earnings per share increasing 18% to $2.82. Beer is expected to drive top-line growth as sales are forecast to rise 8%, and this is expected to offset a 2.3% decline in sales of spirits and wines. Across the year, Constellation Brands said they are targeting earnings per share of $11.20 to $11.50, and that's up from $10.99 the previous year. Pub chain JD Wetherspoons are expected to double its annual revenue to £1.69 billion, and that's up from £773.3 million as it reports its annual results at the end of the week. Like-for-like sales are expected to soar 86.7%, helped by a weak comparative from last year when the UK was of course still suffering lockdown restrictions from the pandemic. However, as fears over the cost of living crisis grow, rising energy prices and commercial costs increasing, concerns over the outlook are also rising. Guidance has already been downgraded once, with like-for-like sales in the first 11 weeks of the quarter down 0.4% compared to last year. Wetherspoons' share price has fallen over 57% this year, trading at the lowest level in over a decade, as investors are clearly fretting over the future. And finally on Friday, we'll hear the latest non-farm payrolls from the US. Well, the US jobs market has remained resilient despite growing economic headwinds hurting the economic outlook. Expectations are for 215,000 jobs to be added in September, and that's slightly down from August's stronger than forecast 315,000. The unemployment rate rose in September to 3.7%, that's up from 3.5%, as more people return to the workforce, which could help lower wage growth. Unemployment is expected to hold steady at 3.7%. Attention will also be on the participation rate, which rose to 62.4%. That's up from 62.1% to see if the trend of people returning to the workforce continues. Strong jobs data will support expectations of a more hawkish Federal Reserve, which could hurt demand for stocks and, of course, boot the US dollar. So, those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements due out this week. In the FTSE 100, we'll hear from DS Smith, Centric, Kingfisher F&C Investment Trust. And in the FTSE 250, we'll hear from Bodycote, Spectris, RIT Capital Partners, Synthoma, Travis Perkins, Morgan Sindall Group, Murray International Trust, TP ICAP Group, Vista Group, Supermarket Income Right, and Merchants Trust. So there you have it. I'm sure the government will be hoping this week proves less tumultuous than the last in the markets here in the UK. A radical mini-budget designed to stoke the fires of growth instead seemed to stoke the fires of the mischievous in the forex markets and the press. A radical budget that was sold badly, proving the point that how you deliver the message can often have a bigger impact than the actual message itself. So, is this lady for turning? Time will tell. All we can do is provide the reassurance that Atlantic Capital Markets will be here, as always, guiding you through the mischief and the mayhem. So as always, thanks for watching, and don't forget to click on that subscribe button to make sure you don't miss out on our regular financial updates with our expert market analysis and opinions. Also, if you haven't tried it already, why not download our app to your phone or tablet if you do want to keep updated on the latest financial news, as well, of course, as our award-winning trading signals. So until next time, from all of us here at Atlantic Capital Markets, have yourself a great week.